Now we're going to hear from our banking panel. It was going to be moderated by Magali Paulus, but unfortunately she phoned up just before 6 p.m. this evening. Very luckily, Apricot Wilson is going to take over and step away from being part of the panel to actually the moderator of the event. Apricot is with LMDF. In fact, she's Deputy CEO and Head of Risk at LMDF. She recently returned to LMDF after completing an MBA at the China-Europe International Business School in Shanghai. She also started her career at Aberdeen Asset Management, and she worked with UNESCO in Bangkok. Aside from all of that, she has an MA in Modern Languages from Cambridge. So this is our moderator stepping in from Magali. And to join her, we have three panelists. Please welcome them also to the stage. We're going to see Philippe Dardard from BGL BNP Paribas, Espen Rachil from SEB, and Constantine Rhan from USB Wealth Management. While you're all taking your places, gentlemen, I'll just give a quick introduction to all of you. Philippe Dardard is Head of Diversification offering at BGL BNP Paribas. His responsibilities include private equity and real estate products, as well as the philanthropic offerings of BGL. And he's also a member of the investment committee at LMDF. Espen Rachil, I've tried to pronounce this as Norwegianly as I possibly can, is an experienced wealth manager with SEB and a passion for emotional dividends. He also told me just before we began this evening that it was the SEB with the World Bank and some other investors who initiated and developed the world's first green bond. Before that, Espen worked for Crédit Agricole and is also a volunteer with UNI. Finally, Constantine Rhan is with USB Wealth Management, responsible for strategic client and investment advisory. He's led various projects to transform businesses, both at USB as well as when working for some of the largest European family offices previously. Please welcome them all to the stage, and we very much look forward to what you're about to discuss.
Thanks very much, Lisa. We're certainly living in a time of increased global uncertainty. I was recently in China, and waking up every morning to the smog, you'd look out the window and think something has got to change. The same goes with social inequality. And it's not just me that is aware of this. We're noticing that the FT recently produced a rather provocatively entitled piece saying, "Capitalism, time for a reset." Given this context, we're all increasingly aware that every financial decision we make has an impact. And this is what I'd like to focus on here tonight. So, starting perhaps with a slightly provocative question, Philippe, do you have to sacrifice anything to do good in the financial world?
Well, I would say no, because in fact, when you are looking at metrics of SRI or SDGs and you are evaluating the companies you want to invest in based on those metrics, in fact, you're only adding something on your investment method, on your investment, the way to see the investments. And in fact, if you invest in companies that do prepare themselves for the future, you will do even better than companies, and I'm sure you will do better than companies that in fact don't care about the future, are stuck in old ways and do not prepare themselves for the changes ahead. So no, we don't think you have to lose anything, and on the contrary, we think you can even earn more by going with more, let's say, straight-looking companies.
And would you agree with this, Espen?
Yes, definitely, and I think that there's been a change in the global perception and the global focus on this. So I think that it's not even a provocative prediction that that this will be even more important in the future, and that companies that don't have a clear vision about doing good or positive impact, they will struggle to attract staff, clients, and capital.
Would you agree? Will they struggle to attract staff, clients, and capital?
Well, I would obviously tend to agree, but I would like to scope up a little bit on the doing good, because in my view, doing good means not only doing good for the greater goals and benefits of society, But ultimately, we do, as a wealth manager at least, have also fiduciary duty and need to look for the goals and greater benefits of our clients. And those two goals we need to blend together. And we, as a wealth manager, as an organization, we also need to be in a position to support them in getting to attain those goals. And for that, we need to be in our own right sustainable and hence profitable as well. And we actually have embarked on that journey, like some of our peers obviously as well, a couple of years ago. And as far as UBS regards, fast forward, after a couple of years investing into our investment capabilities, partnering in a public-private partnership with the World Bank, etc., fast forward, we have now about 200 billion already of client assets linked to sustainable investments. So clearly the train has left the station.
What do you think has been driving the trend, would you say?
Well, I think it's a combination and perhaps even a self-reinforcing combination of both a consumer and investor-led as well as an industry-led transformation which takes hold today. And historically, probably it's been a little bit more on the consumer and investor side. Today, I think as a almost natural response, it's been also quite industry-led. And it's not only that you have those two antagonists there, it is also obviously that whoever works in the industry is also part of the society and responds to similar, very powerful underlying trends which we see and can observe across at least the developed world and increasingly also in less developed countries. And that is demography. We do see that children actually do go on strike. We do see that these children not only voice very vocally their concerns about how our planet should look like, but what I also observe is that there is a feedback loop to the wealth owners, to those ones who today actually call the shots, if you will, on the investor wealth. And I think this is a very promising development which you can see.
Philippe, would you say it's the wealth owners calling the shots or the famous millennials that are driving the trends?
Well, I guess at the beginning it's true that it was a core customers that pushed us to think about our own offering. And then, of course, we developed that offering and we went on and presented not only to those core people, but to the general public. And we now, I think, have a global dynamic where we want to present this SRI and SDJ offering to everybody, and it has to become the norm, the default, the by default stock that we do. And now each and every product has, in a way, a built-in SRI or SDG product. For example, now when we talk about our advisory offering, we can advise a customer as far as what they want to do with his portfolio, but we can also show him what are the companies in his portfolio that are more or less SRI compliant so that he can make both decisions. And even if you are not asking for it, we are going to show it to you. So this is, yes, it's a feedback, and the industry has developed itself around that. And we recently, with KKR, very famous private equity fund, we did an impact fund, an impact private equity fund. So it means that even those very institutionalized products are also coming to this very important trend and try and offer and make their mark on that. So it's yes, it's a constantly feedback loop, I guess.
Actually, Constantine, I know you have a lot to do with product innovation as well. Do you have any things to add on the type of products that are being developed in the social responsible universe?
Well, yes, of course there is the private markets area, which we have clearly seen and which probably was the most prevalent a couple of years ago. Similarly, it was much linked to emerging markets, and typically it was, in terms of the approach people took, much more exclusion-based. Whilst I think today we see much more of an engagement approach to things. It is also more spreading out to developed markets. Obviously, some areas also in Europe are much more advanced in this respect. And in many ways, I would say there is a democratization of things happening. So we see much more weight being pulled also behind those managers who have sustainable investment goals embedded in their investment process, and influencing and persuading companies and their management, which are listed companies, of course, to engage in something which is much more relevant to those people on this earth who want to see a better earth in terms of sustainability goals, which I would just define broadly speaking as the United Nations Development Goals.
And Espen, we mentioned the democratization as being part of the things driving things forward, but what's going to be the drivers in future to encourage the sustainable, SRI universe to continue to evolve?
I feel it's very important to not to focus on who should drive the change. I think we all need to drive the change together, and one can't lead without the other. And it's clear that now we've reached a level where all banks can kind of with courage go out and promote and present a big enough investment universe to match all client situations. It's maybe worth mentioning that we do have a bigger investment universe, but there's still kind of challenges to fill portfolios in all jurisdictions, as there's different jurisdictions and treatments of, for example, microfinance funds in different countries. So it's a little bit of a paradox that regulation is making it difficult to invest good.
Philip, do you have something to add to that?
Yeah, I think we're not going to see much more evolving and specialized product, but rather than it will spill to all the products. It's not about, those investments began as niche like green energy and future tech, and now you find it in every portfolio, and every company has to position themselves in that world, and so we are going a spillover. So the normal products are SRI. It's not about going further into ultra specialized stuff. And it's good because the more specialized fund you have, the less customers are interested into it. If you want a biotech Taiwanese DNA fund, it's for 2 customers in your bank. If you want a US stock 50 based, it's for everybody. So we will do more good by going to the more mainstream product than staying in very niche products. Of course, we can always continue that, but it's important that the main offering now becomes the SRI SDG product. And what would be good is a certain kind of, I would say, systematization, because you're talking about SDGs. Funds they choose themselves to invest like that, but there is no norm. So today we have to be very careful with funds that say that are green, SRI or impact, because you can say that and nobody's going to say to you that you're not allowed to do that. So we at BGL, and I'm sure the other banks, we have to really analyze those companies, those funds, to see if they're true.
I'd be very interested in some advice on that area. I imagine quite a lot of clients want to understand how you analyze a fund, how you're sure that you're investing in the impact you want. Do you have any thoughts on that?
Well, you have to have when we choose a fund, we go and we have a questionnaire and we ask the people managing the fund what they do with the money, how they invest. For example, we ask them, do you vote on a general assembly? If you are a best-in-class fund and you have, in fact, an oil company into your portfolio, you can do something. You can go to those general meetings and you can ask questions, and you can also team up those funds so that you own a very large portion of the company, 2%, 3%, 4%. And when you're asking question about the SRI politics of Total or whatever, then you have an impact. So what we do to ensure that, we really ask I don't know, 80 to 100 questions to those fund managers to really know what they are doing that makes them SRI compliant, and we give them a clover leaf that go from 0, they don't care about it, to 4 and even 5 if it's an impact fund.
And Konstantin, I'd be really interested to know your thoughts. How are you evaluating if something's an impact fund?
Largely, we follow a similar approach here. There's maybe some minor differences really in the taxonomy, etc., but it is really much about engaging with the managers, understanding what is going on, what is their actual thought process, and how would they want to engage with companies. And what we have seen, for instance, that some companies have been, to a large degree, asked to move into something a little bit more sustainable. And to give you a very practical example, a light bulb producer called Osram, that company was spun off a little while ago from Siemens. And in essence, refurbished its entire product array from a less sustainable, if you will, more waste-producing light bulbs to something much more sustainable with less waste during the production, as well as less waste in households and longer durability of the products. And that in part is thanks to, in essence, the global base of investors, you and us here, which try to engage with those companies and make them understand that it is actually close to our hearts and minds, that they develop in that direction, and that management understands that this is also a massive opportunity set for them to be identified and ultimately seized. And I think that is really critical to get this qualitative approach. Sometimes we would now rather need to walk than to run, perhaps, and get incremental positive change.
Did you have something to add, Espen?
Yeah, just that it's very important not just to kind of follow statistics and ratings. It's all about working with the clients and with the companies so that you see real impact and not just shift it around on another balance sheet, because that doesn't change anything.
And I'd be really interested to know your thoughts on someone in this room who's looking to have a real impact. Can they do this with their own portfolios?
Yeah, working on the client side, I think that first of all, the best advice to everyone is to first start saving. Let's never forget and maybe consume less. Then it's a double effect. And then, given the panel and the audience, is maybe not difficult to confirm that portfolio should be in line with both the general ethical and SRI principles, but as well, depending on your time, go into yourself and figure out what's your values. It's of course difficult to find the perfect product, and do not let the search of the perfect product stop you from acting. So start by switching your money into an ethical index fund. And then you can, while being there, doing less harm, you can maybe search for your perfect product afterwards.
Philippe, any
Yeah, totally
additional
agree.
thoughts?
Today you can find whatever your, I think your level of wealth and your profile, you can find funds, ETFs, equities, bonds, even private equity, and a little bit real estate products that will have an impact. Of course, you must not try and find a perfect product today, but you have to make incremental changes, and next year we have new products or you have different stuff. So yes, it's not a black and white situation. You can start, and whatever your wealth and your profile, I just want to stress that you can be a better investor tomorrow. No problem, no doubt about that. All the institutions have products that would allow you to do that.
Yeah, I would echo those comments, and if I may have one suggestion is that why don't we all try just to ask also all our providers for retirement benefits, for life insurance, of pension funds, and ask them, do you actually rally around those UN development goals? Have you actually embedded and them and place them into your product suite you use. And I think that is how we probably, as a society, can one of the largest possible impact altogether in driving probably the wealth of one of the richest generations which has ever lived into those companies, into those projects which will do better at least than some others. Let's put it this way. And I think, again, it's a bit rather walking than running and trying to get these incremental benefits up there. Obviously, the wealthier you get, the more the sky is the limit. But that also comes sometimes that you quickly become a fallen angel. So sometimes it's good enough to keep it really simple in the face of an awfully complex world.
Okay, thank you very much, everybody. Really interesting. I hope you've got a lot of food for thought there. You can certainly do so. You can certainly think, as well as your financial goals, what are the ethical goals that you want to have for your investment? It may not be that the product is ready instantly, but have a think how you'd like to look at the SDGs with in your investment, what other impacts you would like to have, and I'm sure these gentlemen will be willing to discuss further during the break afterwards.
Thank you.
Thank you.
Thank you.